Day trading versus swing trading, which one is best? Hi, it's Charlie giving you this week's video, and a little bit more contentious, I guess, today, because which one is best, or does there need to be one that's best? But what we're going to do is we're going to look at the pros and cons of both. The one thing that, I've been both traders, and I think the main headline to say is that if you're a good trader, you can trade either. If a good trader will be able to day trade, and a good trader will be able to obviously be able to swing trade. The problem that I have with day trading is that most people, when they get into trading, are attracted to intraday trading, and that's not a good place to start. So day trading is really best place for experienced traders. Let me tell you a story. There was a study done in the US on day traders, and they took a sample size of about 1,000 day traders, and after 6 months, about 70% of them were profitable. And you would say that was about right. So 70% profitable after 6 months. You would say that's probably in line with certain stats. And what that's essentially saying is, of course, in the shorter term time frame, the results can be a little bit random, because after 5 years, that number dropped down to 1%. Just 1% of that entire sample size were still profitable after 5 years. So it just sort of tells you that a couple of things. One is that the odds are stacked against you if you want to go into day trading straight away. Also, that even if you have a 3 months or 6 months worth of and you're profitable over it as a new trader, which you could be, then it doesn't guarantee that you're going to remain profitable with intraday trading. There are a lot of factors there. Right, so let's go through some of these factors. Let's go through some of the pros and cons. Let's go through the pros of day trading first of all. So the pros here, and then I'll put the cons over here, and I won't write out everything with my mouse. Still never got a pen. Right, so the pros of day trading are certainly that it gives you the opportunity for taking plenty of trades per day, and therefore the potential to compound your account quicker is there. And compound, because if you're making some gains, forget about every day, let's say every week, then your account is compounding every week, whereas it may not be on swing trading, because it depends on the type of swing trading. You can have short-term swing trading off of like hourly charts, 2 hourly charts, 4 hourly charts, and you're still going to be compounding to a large degree. But let's just leave it at that for now. So you've got that potential to compound your account. Also, as a learning process, then by nature, the fact that you're doing more trades gives you the opportunity to learn more, gain more experience faster from all of that trading. Okay, so I put that down as a pro, that by default, the fact that you are doing more trades does mean the potential, and I have to say the potential's there to learn, because most traders don't learn from their mistakes, but certainly you are accruing more experience by the default of the fact that you're doing 2, 3, 4 trades per day. Another pro is working for yourself, own boss, I'll put here. So this is one of probably the big attractions to day trading, is that you're potentially trading for yourself, and or you are trading for yourself, and you're your own boss. So that's a massive pro there for day trading. Okay, so I'll leave it to you to put some more pros in there, but let's go and have a look at the cons. So the cons of day trading are that, yes, you can be your own boss, but as always, you need the capital. And if you think you're going to be a full-time trader with $10,000 or whatever, you've got another thing coming. You need a lot of capital in order to be a full-time day trader. By all means, have another job. If you think that you're going to be your own boss, that actually, although it can be a positive, can also be a negative over here. Because if you only day trade, the pressure, so put that down as a con, the pressure to have to make that money if you have no other source of income is huge. And so the one way to combat the pressure is to have a lot of capital. The problem is lots of people who get into day trading don't actually have a lot of capital. That's why they day trade, because they think that they can compound their accounts bigger, faster. And that then leads into a circle, because because of that pressure, they then start to overtrade. So there's this capacity to overtrade, over leverage, because of that desire to try and make a lot of money as quickly as possible. So and this is where you get all of these mistakes. So the noise that goes on in the markets during the day is huge, and so the capacity for mistakes is higher. You're having to make decisions, relatively quick in the markets, and so as a result, overtrading, revenge trading, over leverage, all of that stuff goes on. And so from a overall perspective, although yes, you can learn more, the potential to compound more is there, and so therefore people think that you can make more, because they assume that, well, if you're taking 3 trades a day, Charlie, every day of the week, as opposed to a swing trader who's not taking as many trades, well, surely the day trader makes more money. And that's probably one of the biggest myths that's out there. Day traders don't necessarily make any more money. They just make more trades, but they make less on their trades than a swing trader will do. So it tends to even itself out. Bearing in mind that most day traders, competent day traders, risk less as well. So they don't risk higher amounts per trade. They actually drop their risk on their intraday trading, because otherwise it's so volatile. Even if you were risking 1% per trade, let's say, and you go and have 3 losers in a row one day, and then the following day you're going to have 2 losers. Well, in 2 days you're down 5%. That's quite volatile on your main capital. It's a lot of volatility. So serious day traders tend to risk less on their capital because of the potential volatility there as well. So the reality is, in theory, yes, you could. The theory is you could make more money from intraday trading, because of there are more opportunities, let's say. The reality is that it never seems to work its way out that way. That most people who get into day trading actually obviously lose, as I've already said, but most people, you end up having a losing period or whatever that ends up bringing those returns down. It's very rare that you're actually gonna make more money. So okay, so but there are there are a percentage of day traders who do make money and do well at it. My concern is that most people are attracted to that in the beginning, and I think that's the wrong route, because most people end up, this is one of the reasons why 90% of traders fail, is because they go down the intraday trading route first of all. Not all of them, but a large number of them do. So I think the biggest pro for intraday trading is probably just the experience gathering, but at what cost? At what cost? Okay, so if we now move over to swing trading, bearing in mind on swing trading, you can be swing trading off of hourly charts. You can be swing trading off hourly, and as I've said, 2-hour time frame charts as well, 4-hour. So anything that's, you're not necessarily trying to get in and out in the same day, and so you can hold trades overnight, for a couple of days or whatever. And so therefore you're not having to be there in front of the charts. That's the main thing, staring at a 1 minute time frame, 2 minute time frame, 5 minute time frame. That's where the intensity is. And yes, a very good day trader, that's where they're going to operate. But there's a lot of risks with that. So in my view, and I've been that day trader, but knowing what I know today after 20 odd years worth of experience about traders in the main, having seen it from behind the scenes, having relationships with brokers, regulators, that the majority of people should not be day trading. And okay, so let's cover off the pros and cons for swing trading. So certainly a con, it would be less frequent trades, less frequency. But you could also say that's a positive as well, because you're desensitizing what you're doing. So over here on the pros is that I'm going to put less emotional, but swing trading is still going to be emotional. So I'll make that very clear. But relative to an intraday trader who's jumping around based on the price movement intraday, then pros are that swing trading is less emotional than day trading. Swing trading you can do alongside your job, so you're not putting yourself under pressure to have to bring the money in if you've quit your job in order to be a day trader. So you can, now I understand that a lot of people aren't necessarily happy in their work and they want to trade for a living, but again it comes back down to, if you've got the capital to do it, then fine, but if you don't have large amount of capital, then you're just putting yourself under pressure. You put yourself under pressure, you'll perform worse. It's as simple as that. So the pros of swing trading is you can do it alongside your job. Another pro is that actually you can make, when we come to the money, in my view, you can make just as much money swing trading as day traders. It's a myth. People assume that day traders make more money just because of that trade frequency. But like I've already said, sometimes the trade frequency can actually undo them. And also, even if, they should be trading less risk per trade, but even if they're not, then that high trade frequency you assume might mean making more money. It doesn't tend to work out that way by the time they take their losses in. So a pro for swing trading is you can make just as much money even on lower frequency. Why and how? Well, when you're swing trading, you can have more at risk than a day trader. So a day trader, a competent day trader who might risk 0.2 of 1%, let's say, on day trading, who might also swing trade, could swing trade at 1%. So very quickly you can see that the percentages are different, and that's the way it should be. Some form of difference in risk per trade between the two. Now, if you say, well, I'm just going to always do for risk 1%, Charlie, well, so therefore it doesn't make it, so therefore I can make more money day trading. Yeah, fair enough. But the irony is with day trading is that so often there tends to be a big drawdown that comes at some point, a meltdown or whatever, and you go and give back a load of your profits anyway. So the money that you can make from swing trading is, in my view, in the main, don't get me wrong, a very, very good day trader is going to still make fantastic returns. But so is a very, very good pro trader. You know, fun enough, I've got my trading challenge update coming in just over a week's time from now. And, you know, so far in the trading challenge, all I do is swing trade on that. And that challenge is up, what, 400%? I think it was about 400% as of the last update I did in December of 22. I'm recording this in December of 23. So it's up about 400% over 2 years. So, you know, who says that you can't make good gains from swing trading? So certainly that's a bit of a myth. How do you go about doing it? Well, you know, like I said, you can swing trade off of 2-hour charts, 4-hour charts. So your trade frequency is still all right, but then you're a bit desensitized. You can the beauty with swing trading is you can hold on to your trades for longer, and those trades can really compound, and those gains can really compound, especially if you add in as your trade is moving along. You can get exponential gains. It's not unheard of for me to make up to 50R on a swing trade. So again, putting it all together, then the money, yeah, do it the right way, and you can make a lot of money from swing trading. What about the cons from swing trading? Well, this less frequency can mean that your drawdowns can last longer, potentially. Drawdowns, well, they're much more likely to last longer against a good professional day trader whose drawdown on day trading is probably going to last less in time than a drawdown on a professional swing trader. But it's just the nature of the returns. A swing trader can't really measure their returns week to week. They're more likely, a swing trader is more likely to measure their returns quarter to quarter or even year to year, because of the nature of how long they hold on to trades for, and as a result, waiting for the next trades to be cashed in or whatever. So that you can call that a con, but it's not really, as far as how long it can be. So drawdown doesn't have to be deep, but it could just be peak to peak. So if we talk about equity, peak to peak in equity could take a while at times, if you've had a little dip here in your equity in the middle, as a swing trader. But again, most swing traders, aren't trying to make a weekly or monthly income from it, so they'll just take periodic withdrawals from their account. So there are different ways of looking at all of this. So in summary, I think, and I know, and you've got to bear in mind, I've day traded through the financial crisis, had a lot of fun through all that time, and beyond. But I'm just trying to give advice here, not to people who are experienced. The advice I'm giving really is to people who have been trading less than 2 years, if you're still watching this. So, and I would suggest that people who have been trading with less time don't have the emotional resilience to the market. They haven't built that up, and so therefore they're more susceptible to much more mistakes from an intraday perspective, and because of the intensity of intraday, that's where things can really go wrong. So my general advice is as well is, don't quit your day job. If you want to accrue wealth, have a job, whatever the job is, whether it's a full-time or part-time, maybe, whatever the other, have another source of income. Or it might be your partner produces the income, as long as there's no pressure on you to deliver. But in the main, have another sources of income, and don't day trade, because the pressures are so high. Swing trade, and if you want to day trade at some point in the future, then by all means. But usually what happens is, sometime in the future, once you are experienced, you'd say, why do I want to day trade and sit there having to stare at the charts all day long when I can make just as much money swing trading? So that tends to be the realization that people tend to have. So in my view, the pros of day trading do not outweigh the cons of day trading, which are mostly the emotional side of things, which encourages you to make mistakes, whereas you're less likely to have that same level of intensity on swing trading, and yet the returns can be just as good as day trading. There you go, a bit of a longer video here today. By all means, pull me to task on this if you want to, but I'm not criticizing absolute day traders who are good at what they do, who have been trading for some time. What I'm trying to give here is advice to people who are newer to trading, and to say, if you go down that path, you're likely going to lose money, and you're likely, when you're newer to trading, going to lose some money anyway. But day trading, you're much more likely to blow up, and I would rather you didn't. So that's why I'm giving that advice.